Hare Krishna. Welcome to Tax Guru YouTube channel. This is CRO Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. So today we are going to conduct a special video on the topic mismatch between reasons recorded and additions proposed. So let's dive into it. Let me allow to share my screen. Yes. So today's session addresses one of the most litigated and technically nuanced areas of reassessment proceedings, that is mismatch between reasons recorded and additions proposed. So reassessment is a powerful tool in the hands of the assessing officer. However, it is equally bounded by statutory safeguards. The entire validity of reassessment importance upon the reasons recorded. When additions ultimately made do not align with those recorded reasons, courts have repeatedly intervened. So in this session, we will understand the statutory framework, that is section 147 to 151 of the Income Tax Act 1961, examine jurisprudence on mismatch, compare position under old and new law under the Income Tax Act 1961, analyze leading case laws, derive practical defense strategies. So let us begin by first understanding the statutory foundation. So overview of reassessment framework. So reassessment is governed primarily by section 147 to 151 of the Income Tax Act 1961. So under section 147, if the assessing officer, that is AO, has reasons to believe that income chargeable to tax has escaped assessment, he may reopen the assessment. The process requires what? Recording of reasons, issuance of notice under section 148, but post 1st April 2021, compliance with section 148A procedure is mandatory. That is opportunity under order under 148A clause D. So the recording of reasons is not a procedural formality. It is the jurisdictional foundation of the reassessment. So court have consistently held that the validity of the reassessment must stand or fall in the basis of reasons recorded. Thus, if additions ultimately made deviate materially from the recorded reasons, serious jurisdictional issues arise. So moving further, let's understand reasons. What is mean by the reasons? Means what are the reasons recorded? Meaning and importance of reasons recorded. So the expression reasons recorded refers to what? The written note prepared by whom? AO before issuing notice under section 148. So key principles involved here. Reasons must exist prior to notice. Reasons must exist prior to issue of the notice. They must show tangible material. They must demonstrate a live nexus, that is connection between the material and belief. They cannot be supplemented by affidavit or oral arguments later. So this principle was authoritatively laid down in CIT versus Kelvinator of India Limited 2010. The Supreme Court here under this case that reason to believe cannot be a mere change of opinion. There must be tangible material. Reassessment power is not review power. Please note down this. Reassessment power is not a review power. This case, that is CIT versus Kelvinator of India, forms the bedrock of reassessment jurisprudence. So next, let's understand the core issue, the mismatch between the reasons and additions. The core issue arises when AO, that is assessing officer, records reasons regarding one issue, say bogus purchase, but ultimately makes addition on a different issue, say unexplained cash credit. So and makes no addition on the original issue. So question here is such reassessment is valid or not? So judicial view is that if no addition is made on the issue, forming the basis of reopening of reassessment fails subject to certain statutory nuances. Means reassessment will get fails if the reasons are different. So this brings us to the landmark case on this issue. Let's see that landmark judgment under Jet Airways principle. So here, CIT versus Jet Airways India Limited, 2011, Bombay High Court. Let's see the first facts. What are the facts? Reopening was based on alleged excess depreciation. During the reassessment, AO dropped that issue and instead made addition on a different issue. So what Bombay High Court held that if no addition is made on the ground on which reopening was initiated, AO cannot independently assess the other income. The Bombay High Court ruled that the foundation of reassessment must survive. If the foundation fails, the superstructure collapse. So that is the main thing, that the foundation of reassessment must survive. This became known as the Jet Airways principle. So several high courts followed this view. Moving further, let's see supporting judicial precedents. So let's see one by one. In Ranbaxy Laboratories Limited versus CIT 2011, Delhi High Court held that if no addition is made on the issue recorded in reasons, reassessment cannot be sustained. What Delhi High Court also held that if no addition is made on the issue recorded in reasons, reassessment cannot be sustained. In Mohammad Junaid Dadani versus ITO 2013, Gujarat High Court held that reassessment invalid where recorded issue not ultimately sustained. In Principal CIT versus Mehak Finance Finvest 2017, Delhi High Court reaffirmed that the assessing officer must assess income forming basis of reasons recorded. Thus, majority high courts took a consistent view. Moving further, let's see explanation 3 to section 147. What was the contrary view? So Finance Act 2009 inserted the explanation 3 to section 147. It states that AO may assess any other income. AO may assess any other income which comes to his notice during reassessment. Revenue argued here that even if no addition on original issue, AO can assess other issues. However, courts interpreted this explanation 3 harmoniously and they held that explanation 3 permits what? Addition of other income only when reassessment is validly initiated and sustained. What they held that the explanation 3 permits addition of other income only when the reassessment itself is validly initiated and sustained. If original issue fails completely, jurisdiction collapse. Thus, explanation 3 doesn't cure the jurisdictional defect. Very important. Explanation 3 doesn't cure the jurisdictional defect. Moving further, let's see position under the new law, that is under Income Tax Act 2000, Income Tax Act 1961 only, but post 1st April 2021. Under the amendment regime, that is post Finance Act 2021, AO must conduct inquiry under section 148A, provide opportunity and pass order under section 148A clause D. Now the information and 148A clause D order form the basis of reopening. If reassessment ultimately travels beyond the information or the 148A clause D finding, then similar jurisdictional objections arise. Although jurisprudence is evolving, courts continue to examine whether final additions align with foundation material or not. Thus, mismatch issue remains highly relevant even under the post 1st April 2021. Let's see practical litigation strategy. So practical steps for professional, what are that steps? Immediately request copy of recorded reasons. Analyze whether final assessment aligns with those reasons. If no addition on recorded issue, raise immediately jurisdictional objection. Raise ground before CIT appeals and ITAT and consider the writ remedy in appropriate cases. So what is important here is jurisdictional defect can be raised even at later stage. Jurisdictional defect can be raised even at a later stage. This defense has succeeded in many cases. Let's moving further. Let's see illustrative examples. First example, say if reasons bogus purchases of rupees 50 lakhs, final addition, unexplained cash deposit of 30 lakhs. So no addition on purchases, reassessment would be invalid. In example 2, let's see reasons accommodation entry, AO drops issue after verification, adds unrelated issue, then it will be invalid. In example 3, say partial addition on recorded issue. In such case, reassessment survives. So survival of foundational issue is critical. In example 3, what we see is that the practical addition, partial addition on recorded issue, in such type of cases, reassessment can be survived. So the survival of foundational issue is what critical. And now moving further, let's see key takeaways from the relevant today's discussion. To summarize, reassessment validity hangs on the recorded reasons. If no addition on recorded issue, proceedings generally fail. Explanation 3 of section 147 doesn't override jurisdictional requirement. This is a powerful defense strategy, so must be examined carefully in every reassessment case. So what we can conclude here is that the doctrine of mismatch between the recorded reasons and additions proposed reinforces an important constitutional principle. Jurisdiction cannot be assumed casually. Reassessment is not an unfettered power. It is conditioned by safeguards to protect the taxpayers from fishing inquiries. As a professional, it is our responsibility to examine reassessment proceedings critically, to safeguard due process, and to ensure what lawful exercise of jurisdiction. So thank you so much for patient hearing. That's it for today. If you want, you can please note down my contact numbers. And if you have any queries, questions, observations, suggestions, then do let me know via WhatsApp, email, and you can also comment below the video. So thank you so much. If you are not yet subscribed Tax Guru YouTube channel, then do subscribe for the latest updates and video series like this. So stay tuned to the Tax Guru YouTube channel. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.